Moving on then, as part of our ongoing series Asian Tigers, Udayan Mukherjee caught up with market guru Mark Mobius of our Templeton Emerging Markets Group to get a sense of what, in fact, the Trump impact could mean for some of India's exports-facing sectors. Let's hear him out.
We still find value in the IT sector. We still hold IT stocks, but we're also increasing in some of the internet stocks as well, because we're seeing stocks now that actually earn money, which we didn't see before in many of these internet stocks. So if you look at our weightings, you'll see there's been a transformation, partly because the oil and minerals prices came down, so the weightings came down. It didn't mean that we sold, but because the weightings came down. But IT definitely has gone up.
What are your top overweight sectors in India right now? What are you most optimistic on?
It would be IT, would be probably a little overweight, and it would be in consumer-oriented stocks. That would be overweight. Those would be the two.
What about telecom, where you did have some interest a few years back, but that sector underperformed, but started picking up recently once again? How do you read it?
We don't have much in telecoms because we're always afraid of the government using telecoms company as a cash machine. So we have to see more stability in terms of the licensing.
In terms of shocks to the market, do you think China can come back onto the table as a risk? Because, I mean, I remember last year it was a big talking point, and now people seem to have just quietened down a little bit on China. How do you see things there?
Well, you know, China has always been a big question mark for so many people because they look at it through the eyes of Wall Street, which is really not the way to do it. It's a planned economy. They decide what they want to do, and they go ahead and implement it. They have bumps along the way, and they correct them. But at the end of the day, when they say 6% growth, that means 6% because they're going to give money to the major banks, which they control, to create the credit that will result in 6% growth. So I'm pretty sanguine about China. Now, I realize there'll be individual problems. There'll be companies that go under, groups that go bankrupt, no question about that. So we're going to have to be very cautious, particularly since the government wants to move more and more towards a market-oriented system, which means that the benefits and the ills of the market economy will be imposed on these companies. But when you look at the state-owned enterprises, it's difficult to imagine any of them going bankrupt in the true sense of the word.
And remember, you can catch the entire conversation at 8:30 p.m. tonight, only on CNBC TV 18.